Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, December the 23rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data other than the fact across the pond we got final GDP numbers from Great Britain coming in at 0.6%, was expected to be 0.5%. And then here in the United States, we've got our new home sales. Remember, we got the existing home sales earlier on in the week. We got the new home sales now actually doing better than expected, coming in at 592,000 units, expected to be 575,000 units. We also got University of Michigan consumer sentiment coming in at 98.2, in line with expectations. On to the overall markets, we've got crude oil moving into positive territory, up at 3 cents, trading at around $53 a barrel. Going on to gold futures, they're also up on the day slightly, just by $4. Gold finding a sideways trend, but still cannot bump above that 9-day moving average. It's just really acting as a resistance area. Then the bonds, we finally got above that 9-day moving average. Haven't settled above there yet. Obviously, it's not the end of the day. Yesterday it tested it, but it looks like it kind of settled just below that. That could be a reversal of trend if we see that, but we're starting to see pretty decent economic data. It's not really saying that the economy is robust by any means, but we are seeing better economic data as of lately, so don't know if that trend's going to be able to continue. Then on to the Dow Jones, down just about 5 points on the day. Still talk about that 20,000. Again, I think that we're going to see it come off before we're going to see a bit of a pullback, maybe a few hundred points before we see that rally back to that 20,000. And then on to the NASDAQ. It's actually leading the way in percentage terms to the downside today, albeit it's only down about 9 points right now. The overall equity markets slightly coming off a little bit as we're going to start seeing people take profits after these big rally. I just cannot see people wanting to hold on to the profit gains during this year. A lot of these big funds, I think, are going to start covering coming into next week. Then on to the E-mini S&P daily chart, down slightly on the day, 2 points. Overnight was on the highs, but as soon as the markets opened, we got a bit of a push to the upside, but then trying to price that in possibly. But the overall market's near the lows of the day. As I started this out, we were testing those lows of the day. On to a couple of things that I've done. Target, you can actually probably do this better. I covered this trade yesterday. Just could not justify holding on to this trade. All of the retailers were getting just lambasted yesterday. Target being one of the bigger percentage movers to the downside. I think they were down about 4% on the day yesterday. And if you remember yesterday, I put on that January 77.5 put spread in there. So basically playing that to the downside. I actually bought the 77.5 puts, sold the 74.5 puts. As soon as we got down where I was seeing about 60-cent profit, actually 55-cent profit in that trade, I looked to try and cover that trade for about 50% of the max profit. Probably could be done today. But on that type of trade, I originally paid $1.46 for it. So I'm basically risking one to make one. So the max profit on that trade would have been about $1.54. When I got to that 55 cent being a third of that overall max profit in one day, you just can't justify holding on to that for any longer in my eyes. So I decided to cover that. Probably cover it for a little bit better today, but it looked like it basically was wanting to cover this gap. That's the reason why I put that trade on. It's very close to it. It could still cover that, but I covered that trade immediately. The other thing that I needed to keep a real good eye on is this Lululemon. Now, if you remember, I had on a strangle for the earnings trade, went through my short calls, which were the 65 calls, and I had that stock put to me. So, and I did that on purpose because I figured I would just start trying to lower my cost basis. And if you remember, then I went out and sold the 65 put. So if the market comes down below that, I could have that short stock called away for me, or somebody's going to put me the stock, and it will offset each other. So I probably won't go through that whole rigmarole. I'm going to probably look to cover that trade before that expires, but I'm going to kind of let it play out for a little bit longer. But if it looks like it's going to settle above 65, I'm going to completely cover the whole trade. I'm not going to try and leg out of it, like buy back in my short stock, hold on to those puts. I'm just going to cover that trade completely. So keeping an eye on this one, keeping a short leash on it. If we settle down here below yesterday's low today, I'm going to probably hold on to this through next week, because I believe that the overall markets are going to pull back a little bit next week, and I might be able to get a little bit better pricing on that particular trade. That's about all I've got going on right now. Today's webinar is going to be on the put calendar. It's going to be a great one, because if things start shaping up the way I think that they're going to next week, this will be a good trade to have on. We could start seeing implied volatility expand a little bit, and that would be the perfect scenario that we're looking for this type of trade. So go to ProTraderStrategies.com, sign up for that. I know a lot of people probably want to get out for the holiday weekend, but if that is the case, you can have this video sent to you and you can watch it at your leisure, all right? So that's all I got for you today. If you can't take that, take it easy.